Good morning, everybody. Glad to be with you virtually. I am Brett O'Daniel. I'm co-founder of Hometraq. And Hometraq is solving big problems for both home buyers and lenders. First, we address the pain points of the consumer, and then we show you how it comes together for our lender partners. So if you or a family member are looking to buy a home, you know firsthand that the real estate experience is outdated and it's socially irresponsible. 74% of consumers find the home that they end up buying on their own, but they still have to call an agent to tour them. Or worse, they use real estate websites and they get bombarded with calls and texts and emails. Hometraq is the socially responsible solution. In the same way you use Uber to quickly find a driver to get a ride, you use Hometraq to quickly find a real estate buyer's agent to show you any home that's for sale. You also are delivered down payment assistance options for that home. You pick the home, the day and the time that you want to see the home, and a real estate agent confirms that appointment within minutes. Consumers can now schedule a showing and receive confirmation within 3 to 5 minutes, which is often faster than getting an Uber driver. So once a consumer identifies a specific home, they see down payment assistance options and they may choose to get qualified through the digital mortgage. While down payment is one of the largest obstacles in purchasing a home, 70% of consumers are still unaware of available funds for those homes. And believe it or not, consumers are still exposed to fair lending and redlining violations. This platform eliminates unintentional and intentional prejudice, as many agents discourage communities and they don't treat everyone equally. A request notification is pinged out to the network agents based on their availability and their location, and that's signified by the blue dots there on the screen. This consumer chooses the date and the time that they want to tour the home, and they decide if an alternative time is convenient. The consumer and the agent can communicate through the chat feature, but we do not share the consumer's contact information. It's very important. We have talked about the consumer pain points now, but what we're really doing is solving a mortgage problem with a real estate technology. Banks lose 93% of the mortgage opportunities from their own customer base every year. And we have created a silver bullet for those lenders of how to capture mortgages before those customers are referred away by real estate agents. And we've actually created a second silver bullet for realtors. They love our platform because there's no upfront cost to meet new home shoppers. Hometraq's primary go-to market strategy is through our lender partners. It's a no-brainer when banks give consumers Hometraq to promote home ownership in all communities and deliver hot leads to the local real estate agents instead of chasing them for loans like they historically do. Banks generate $6 million in revenue for every 100,000 customers that Hometraq is marketed to. Lenders distribute Hometraq through a co-branded experience to their consumers. So lenders now are notified that their customers are shopping for homes and they can instantly deliver that mortgage pre-approval. Hometraq receives an industry standard 25% referral fee on every buy-side transaction. So for every 100,000 customers that our lender partners market to, 1.35 million in revenue is generated for Hometraq. You want to flip the screen real quick, Brendan? We make money when our lender partners give their millennial customers a smooth home buying experience, and we help them overcome that down payment obstacle. So Hometraq is consumer-centric, and no one else in our competitive landscape really is tackling it the way we are. We are the only platform that gives lenders that intel that their customers are physically touring homes. And then promoting that down payment assistance is a big deal for our lender CRA, and it's a huge differentiator for us. So Hometraq is live. We're active. We're generating revenue. We've secured dozens of distribution partners. Most of the national real estate brokerages and hundreds of real estate agents are already in our network. We recently added 8 new partners, and we're now marketing to over 100,000 of their customers. Our financial projections include our early traction of 1%, and that doubles an average bank's production over a 6 to 12 month time period. That customer base can come from one large bank or several banks in a market. We simply expand to a new market following our lender's footprint, which extremely minimizes our barrier to entry. So our team, my co-founder, Mark Gorman, and I, we have over 50 years in mortgage combined, over 50 years mortgage banking and real estate experience. So we know firsthand how Hometraq fixes these distinct pain points across these channels. So we're currently integrating home showings on demand through a national partnership, and we plan to exit in 3 to 5 years. When banks deliver Hometraq to their customers in all the markets, it's extremely scalable. The total addressable real estate market is 2.1 trillion a year, and this generates large scale revenue for Hometraq. And then the social impact of Hometraq, and I mentioned it a little bit, it focuses on the low to moderate income areas, minorities, and then specifically serves disinvested neighborhoods. So through our partnerships with community development organizations and HUD-approved housing counselors, we help provide access to housing while also leveraging the local lending community. So our main ask is for introductions to decision makers in banking, credit union, and mortgage industries to distribute Hometraq. So I thank you for your time to learn more about the socially responsible real estate solution. And we ask you to help us make a difference in thousands of lives by providing easier access to housing. Thank you.
Great kickoff on time. I love it.
Oh,
We will
good,
now
good.
hand it over to our panelists.
Good morning, Brett.
Good morning.
Good presentation. Thank you for that.
Thank you.
You know, I think the industry that you're serving is in for a complete overhaul. You know, we're seeing the whole cash buyer phenomenon coming in and being able to fund that. So you're entering a marketplace that's in somewhat disarray, and you're definitely going to have to pinpoint the specific pain that you're solving. And so from your presentation, I think I hear, you know, you're connecting to lenders, but I think there's also I'll call it a buyer agent lead generation. What would you say your number one pain point is that you're solving for?
The number one pain point is it's kind of dual, but our focus and delivery is through the lender channel. So the helping the banks get to more customers before they're referred away. Traditionally, they're referred away by the local real estate agent. So that's our delivery model, and that's a huge pain point for banks and credit unions. But ultimately, the customer is the biggest winner because they get a transparent and a no obligation, no hassle home showing, and they're able to meet different agents as they tour different houses, and they don't have to commit to anyone. So it's really those two. I don't mean to disregard real estate agents because they're part of our solution, but that's the easiest part of our model.
Right, and the buyer agents, they don't have an expectation that they're going to sign on the client as an exclusive agent.
Correct.
So you can bounce around.
That's what they're hoping, but there's no obligation. Yeah.
So with the number one pain point being the lenders, you know, I think really being specific on your differentiation, because it is a pretty crowded marketplace when you go back 20, 25 years with LendingTree. You know, if you had a slide that said, this is how we're different, and I don't want to pinpoint LendingTree, but, you know, other lender lead type of portfolios, I think that would be helpful. Don't get me wrong, I think your slides are well done.
Good, no, that's great.
But it's just, you know, it's just a crowded marketplace, and so really specifically differentiating. The other thing is that you're setting up a market, I think a three-way marketplace, right?
Yes.
So
yes.
lenders, the clients, the buyer agents. And so from experience with marketplaces, you just need to make sure that you have demand on all three of those points.
Yes.
Because if you're overweighted in one, it can be a challenge to work with. Other than that, think about you know, as far as extending your platform, the cash offer, I think that is really hot right now. And since you're connecting lenders already, in natural extension, I think of this platform would be able to, for your clients, you know, the buyers here to walk in with essentially a cash offer. I think that's a pretty compelling market these days. So just something to think about as you extend.
Sure, no, I really appreciate it. All good feedback.
And last question, have you generated revenue yet? Do you have traction?
Yeah, no, we have, yeah. So we started in the Midwest, and we're now expanding to Texas and the East Coast, yes.
Okay, great.
So Brendan, great job fitting in the 6 minutes. So you set a good you know, hurdle for everybody to meet the 6 minute target. I know that's really hard to do because I'm sure you had a lot more you could have told us.
Absolutely.
I'll do the disclosure. I did 20 years at a little bank down the street here, and as Rob said, we went through a lot of this. Hey, let's transform the home value experience. 25, 30 years ago, lending trees here at the banks here. We actually drove something called Loans.com that we did that was basically a bank-friendly version, a more bank-friendly version, if you will, of lending tree. And I think to your point, you did your competitive landscape where you laid that out. I would have liked to have seen that a little bit earlier to kind of focus, because as Rob said, there's a lot of places where you could play in this market, right? From the lending tree lead gen model to the Zillow, which is kind of a more complete thing, and kind of where did you fit? So again, I know you had a lot. I've got to say this because Rob's heard this probably about 100 times now, but more on the team, right? Because if you're doing this, especially as an investor pitch, the investors are going to make the decision based on the team. And I know 6 minutes hard, but you did a very, very short version of what the team, and it looks like it was a really good team, but honestly didn't have enough time to digest much of that. So I really like when you build the team story into why you guys started this, why you're passionate. And I have to say there was a lot early on, and I was trying to get laser focused on where you were, but you kind of, by the time you were off one thing and you were on to the next, social responsibility, and I get the redlining and the whole kind of bad history with that and how you might fix that. Then you went into, we help with down payment, and I have to admit you completely lost me on how you help on the down payment side. And I guess that's because of the relationships you would have with the banks, but I wasn't sure because we didn't really get into the detail there. And then as Rob said, the fact that you've actually, if this is a three-way marketplace, right? They're hard. I've done many of them in the last 30 years. They're really hard because you got to get all three players going, right? And in this case, you got to get banks going. That's an art form in and of itself. You got to get customer acquisition, right, on the buyers, and then you've got to actually do this in a way where you're not going to piss off the realtors. And that's a really big thing. I will tell you, when I was at Bank of America, we actually started, we were going to put a real estate office in every single bank branch. We did that whole thing. We went to Congress, we testified, we got rules changed at a federal level. And then the realtor market came back to us and went to our CFO and said, hey, if you actually do this, we're going to pull all the realtor money out of the bank throughout the country. So the realtor market, you got to make sure, and this is where it's hard, you got to do this in a realtor friendly model, or you're going to get a lot of industry resistance.
All good feedback, and I'll just, everything you said, yeah, I know the 6 minutes, we do our best. The real estate agent part of it, they get the 25% referral, and we actually pay them for each home tour. They love it. Yeah, I mean, are there occasionally ones that don't like being referred to as an Uber driver? Yes, but for every one of those, there's 3 or 4 that love it. So I mean, your point is well taken. That is the easier side of our three-sided marketplace. We definitely have been able to identify that.
And so your analogy, the Uber for real estate, will resonate with investors, but you're absolutely right. Don't use that with the real estate community.
Right. Well, the funny part is some of the agents actually are Uber drivers. That's an interesting angle on the whole thing.
Nice presentation, though. Thank you.
Thank you. Appreciate the feedback. Anybody?